companies like Tesla and Amazon for their first 20 years of business were not paying taxes. Many people throw around the fact that the US government, or just any government, should provide more for their citizens. All right, welcome back, everybody, to the Know Your Numbers REI podcast, where we equip real estate investors with tax knowledge to grow their ROI and cash flow, as well as their account savings. Today, we're going to be diving into 5 ways the US government incentivizes tax savings. Now, we talk about real estate, and we will in some of these strategies, but this is a very general discussion. We're going to talk about 5 specific topics. Not all of them are specific to real estate, but they're really 5 areas that the US government is incentivizing you to invest so that the economy can flourish and that you can keep more money in your account and the society of the United States is better off. And that's really how we're going to tackle it. I want to look at the why they incentivize and how you can take advantage of such incentives. So before we get started, if you get any sort of value out of this, I would really appreciate and love if you could give us a 5-star rating and review and share it with a friend, because there are tips and tricks that everybody can gain from, and it's important, especially in this time of economic uncertainty, that people are equipped with the knowledge. Our focus is real estate investors, helping them limit their frustrations around the tax code, but today's discussion will really be about more than just real estate. That being said, let's jump into it. Industry number 1 that the US government incentivizes through tax savings is obviously real estate. Now, we know that real estate has tax savings. I believe it was Dale Carnegie, maybe Andrew Carnegie, one of the Carnegies, said that 90% of millionaires became so through the power of real estate. And there's also a quote that I'm sure is attributed to somebody, but I'm not sure who it is. It says, "Buy land because they're not making any more of it." Now, why does the US government incentivize it? Well, when you live in the United States, there are usually 2 things you need. One is housing, and the other is income. And the United States government realizes that many people need housing, so they tell the real estate investors, you or anybody else out there, that we will provide you with monetary rewards for providing our citizens with a place to live. How do they do this? They do it through things like depreciation. They do it through things like bonus depreciation, which many people are familiar with. So every year, the US government says you can have a tax write-off for a certain amount of that house to account for the loss in value that comes with just wear and tear. It's not just houses or properties that are open to this, but that is where the best opportunity is. Many of us are familiar with the idea of appreciation, which says that the value of a property goes up in value over the course of time. So you buy a property and you're able to depreciate it, which means that you take that write-off, that tax write-off for the wear and tear of the property, and over the course of 27 and a half years that you hold it, it has since increased in value. You've gotten a full tax write-off for the amount that you paid for it, and you're likely very close, if not already owning it free and clear. So there are tax benefits to real estate, which comes because the US government knows that real estate investors, people in the real estate industry, are providing their citizens with housing that gives them the ability to prosper and to live comfortably in this country. And that is reason number 1 for tax benefits in real estate. Now, why doesn't the US government just do it themselves? And that is often a question, especially in today's world. We're dealing with uncertain political ideas, and many people throw around the fact that the US government, or just any government, should provide more for their citizens. And while it's good in theory, it doesn't work out in actuality. This is more of a socialistic or a communistic idea, and as we've seen in history, communism does not work. And part of that reason is because there are people in our nation and in the world that are better equipped and more incentivized by providing these things to citizens than the US government is. So the US government says, okay, we know that we can't do it to the best of our ability, so we're going to go out and ask people to do it, and the way we're going to ask them is provide them with an incentive to do so. So it's a win-win, because the investors get money from their tenants, the tenants get a place to live from the investor, and the US government has happy citizens that can go and enjoy their life here in this country. So One area that the government incentivizes tax savings is through real estate. They do this because they know that there are people out there who are better equipped, more creative, and much more skilled in the market of industry, and by providing them incentives, they know that their citizens, the US citizens, will be able to acquire places to live, which is one of the most dire needs for anybody in a society. And so the US government says, okay, how can we make sure that all of our citizens have shelter? Well, we can incentivize those people who know how to produce shelter to go and do it. Second area that the US government, and really any government that knows what they're doing, incentivizes tax deductions is in the business world. And similar to the investor that is producing a place for somebody to live, businesses are producing a form of value in the form of goods or services. And so the US government knows that in order for their society to work to the fullest potential, they need people to be able to acquire these goods and services that are in demand. So they say to the business owners, listen, if you go out and take the risks involved with starting a business, then we will incentivize you by providing you with tax savings in the form of writing off your salaries for your employees, writing off your rent for your warehouses. But the US government is formed on this capitalistic idea that says, okay, we are going to incentivize people to provide value, the consumers will receive value, and there will be an exchange that will allow enough value to be provided and enough people to acquire such needs that the society will flourish. Another thing that businesses are able to do is provide income to other constituents, other citizens, right? So I mentioned the write-off that comes with salaries, and I'm sure there are some people listening to this that have a W-2, and the reason they have a W-2 is because their business, their employer, is willing to give them a certain amount for the value they provide. So if you're a W-2 worker, you know that every week, barring any unforeseen circumstances, you are going to get a paycheck, and that's going to keep you showing up. So businesses are incentivized not only to go and make money, but they also are incentivized to go and hire people to work for them, to help them make money and provide a source of income for such citizens. So it's really twofold. It's one, the businesses are incentivized to provide value, and the US government and other capitalistic governments are willing to give rewards for that value provided in the form of tax write-offs, not to mention the actual reward of an income. And then they also get a tax benefit for employing the citizens of the country, because we know that there is only a certain number of people that are willing to take those risks and do what it takes to provide that high value, to get those tax write-offs, to get that income that some of these businesses are making. And so for those people that aren't able to do that and don't want to take those risks, they are still provided for by these businesses, and the US government rewards them through the form of tax write-offs. Third area that the government incentivizes to provide and offers the incentive of tax write-offs is this area of technology. There are certain tax credits that companies, startups are qualified for and will offer research and development tax credits. And part of the reason the US government does this is so that they can incentivize advancements in technology. We are no stranger to the fact that technology provides growth and greater efficiencies in every area of our life, right? Right now, we're kind of in a time of technological uncertainty. There's a lot of talk of ChatGPT and artificial intelligence and what it's going to do for our employment factor, our employment force, our job force. But over the course of time, over history, technological advancements have always occurred, and they are often incentivized. And right now, there is a period of incentive for people in the technology sector to go and invest in such research and development in different areas, so that we can see the result of such research in the form of greater products, greater services, greater efficiencies, and it will free up more of our time, and our energy can be invested elsewhere. Companies like Tesla and Amazon, for their first 20 years of business, were not paying taxes, and part of that was because they were surrounded by these advisors who knew the tax code that said reinvest, reinvest, reinvest. Take advantage of these credits that are available to you that will give you a dollar for dollar reduction of your tax bill, and just keep at it. And now obviously Amazon and Tesla are paying billions of dollars in taxes, but there are ways when you get started to not pay those taxes because of the incentives that government offers. And one of those markets that they're looking to advance is the technology sector. Right now, obviously, ChatGPT is a big hot topic, the center of a lot of conversations, but I'd be willing to bet that OpenAI, which is the parent company of ChatGPT, is probably paying very little in tax, as they're still in this research and development phase. They're introducing products to the market, and fast forward 10 years from now and you'll probably see that they're paying a lot more tax, but they didn't pay as much here and now, and it's probably because there's certain tax loopholes that they're taking advantage of, one of which is that research and development credit that I mentioned. Area number 4 that the government incentivizes is energy/environment. The US government will incentivize you to invest in clean energy, invest in the environmental sector. And again, it comes in the form of tax credits, and there's certain tax write-offs for investing in areas like oil and gas. So one area that we're seeing that more and more, and I would encourage you to be on the lookout for, is the environmental and energy sector. Whether it's solar, whether it's hydrogen, whether it's different forms of energy, there's a lot of states that are incentivizing in the form of tax credits or tax deductions the investment of solar energy or other forms of renewable energy. And it's because of this idea that we want to take care of this earth, we want to keep it going for as long as we can, as much as we can, and the US government understands that and knows that over the past 100 years we probably haven't done as much as we should. We have incentivized production and consumption, and we haven't always looked at the long-term effects of some of these things that we're producing and consuming. The government wants to incentivize areas that they know need to grow, whether it be real estate, whether it be business, whether it be technology, whether it be environment. A form of incentive is tax write-offs. Taxes are guaranteed. Everybody has to pay taxes, but the government knows that if they can entice you to pay less in tax by investing in areas that they want to grow in, then you're more likely to take that action than you were if they were just going to tax you the same way. The last area I want to touch upon is charity. In 2017, Donald Trump again came out with the Tax Cuts and Jobs Act, which was the biggest overhaul that we had seen, I think probably since the 1980s, in our tax code. And one of the things that he did was increase the standard deduction, right? For those that are unfamiliar with the way the tax code works, when you file your taxes, you have two options. You can take the standard deduction or you can take the itemized deduction. And the standard deduction is basically a flat amount. In 2022, it was right around $12,500 for single, $25,100 for married filing joint. And what this does, it's like, okay, we will automatically deduct $25,000 from your taxable income as a form of just being an American citizen, right? So if I had $100,000 of income, I get a standard deduction of $25,000 because I'm married. My taxable income instead of $100,000 is now $75,000. I pay taxes on that $75,000. That's the standard deduction. The itemized deduction is anything over and above that standard deduction. So if you were married and the deduction was $25,100, then if you had expenses like state and local taxes, mortgage interest, real estate taxes, a certain number of categories, health and medical expenses outside of insurance, if that went over and above the standard deduction amount, then you would choose to itemize. And one of those categories is charitable deductions. And so one way that you can use charity to better your tax profile is by combining multiple years in 1 year. So one thing that's recommended is to combine multiple years into one to get yourself over that standard deduction amount. So if you're single and you made $100,000 and you're like, I'm right on the cusp of $12,000 to get over that standard deduction amount, you could instead say, okay, I'm going to give another $10,000. I'm going to take the itemized deduction. In this year, I'll bring my $100,000 down to $80,000, and then year 2, I'm going to take the standard deduction because it's likely that's gonna keep going up, right? So the standard deduction often goes up because of inflation, and so one thing that we've advised people on, we know that others are being advised upon, is considering, and I'm not saying do it, speak with a tax advisor before you take any action, but considering the idea of pooling a lot of money into one yearly charitable give so that you can take advantage of a higher itemized deduction in year 1 and then a higher standard deduction in year 2, and so on and so forth. A more specific area that charity is incentivized is this idea of a charitable remainder trust. And I think this is more important for people in the real estate side, people that are increasing their income, they're doing a lot of sales. And again, these can get complex. I strongly urge you to reach out to a tax advisor. If you don't have one, reach out to us. But the idea behind a charitable remainder trust is that you have a certain amount in your CRT, charitable remainder trust, and every year while you're living, you take a certain amount out of that. It depends on how you set it up, it depends on what your needs are, but you take a percentage of it, say 5%. And then when you pass, that entire trust is handed on to the charity of your choice. And again, there's a lot of ways to set this up. There's a lot of different characters behind these trust vehicles, but The idea is that there are incredible tax incentives to setting this up, and for people that are selling large properties, that have a lot of large properties, that are selling their businesses, this is one way that the government incentivizes people giving back to charity. And I'm not going to get away from the topic without talking about the why behind it, and part of that is just because for the 300 years that we've been around, philanthropy and charitable giving has been an incentive, and part of the reason is because our nation is rooted in this biblical worldview, in the Judeo-Christian ethic, which calls you to give and to be generous with all that you have and take care of the needy and help the poor and feed the hungry and heal the sick. So there are incentives in our tax code that are rooted in this biblical worldview, and it's incredible to look at. And my prayer is that we just continue down that avenue, that more people will enter into the economic sector from the church, the body of Christ, and it will allow the economy to flourish in greater measure. Now, I'll preface this by saying this is not a one and done list, right? There's so many areas that the government looks to, and we'll probably dive into some of those more as we continue to evolve this podcast and grow this podcast and teach more on this podcast. But these are the 5 that I believe everybody should be aware of, should think to, should know about. And if you have any questions for me directly, again, fill out the form, reach out to me on social media, and we'll get your questions answered. So to recap, the 5 areas that the government incentivizes tax deduction. Number 1 is real estate. Number 2 is business. Number 3 is technology. Number 4 is the environment. And number 5 is charity. That's 5 ways, all unique in their own regard, all incentivized in different ways. But the important thing is to realize why it is, so that when people say, well, we should just tax the rich, we can understand that that's not going to work, because these guys are doing this for a reason, and if you provide them with enough reason to not do it, they will turn away. I thank you all for tuning in. I wish you nothing but the best. And again, if you got any sort of value out of this, please leave us a 5-star rating and review. Share it with a friend who you believe can get value out of it, and reach out if you need any questions answered or are looking for a strong real estate tax accountant. I love you all. God bless. We'll talk soon.